Why the market is getting reversed from the place where exactly I'm entering. How many times it has happened with you that every time you entered the trade, it hit your stop loss and then it hit your targets?
It's happened many times.
Many
I think
times.
everybody goes through it.
When a market is sustaining here and there is a breakdown, you enter at this point, you should enter here.
And this strategy, are you mainly trading it on volatile pairs like BTC and gold
Everywhere,
and silver?
all pairs. I could show you any time frame for investing, swing trading, intraday trading, 1 minute time frame, 5 minute time frame. Your entry should be here. And for the 800, take the next resistance, boom, your target is hit. Your entry point should have been here, and this would have been your TP. You could see almost 2,500 pips with a risk reward of 1:8.
Did you catch this, by the way?
And this is on the same setup I made $100,000. Same setup.
Welcome back to another episode of Strategies. Today, we got one of the most famous traders from India, Abhay Patil, and he's been trading for the past 8 years, streaming for the past 6 years, every single day, every single session. And just recently, he's made $100,000 on a single live stream. Abhay, welcome to the show.
Thank you so much for inviting me on the show. I love being on this channel, sharing my knowledge, sharing my ideas with you guys, sharing my strategies. And thank you, Hunter, for being a really nice host and a friend. So for sure, this session will be too much informative. I'll sharing my strategy, how I made those $100,000 on live, what is my psychology, everything you will learn on this episode.
I'm very excited to dive in. And for those that don't know your strategy, I've been watching you, of course, for the past year and a half now. What is your strategy based from, and how did you come up with this strategy?
When I started trading and whenever I used to trade, I used to buy and the trade used to reverse from there, like used to go down. And when I used to sell, the trade used to go opposite of me. And I used to think like, I have learned so much of technical analysis, I've learned all the patterns and why the market is getting reversed from the place where exactly I'm entering. So I was like cracking this down, like back testing these things. And I understood like when the market is making you think that this is a buying position and the market reverses from here, that is how 90% people are losing money, because the market makes you think one way, but it's reacting the other way. I wouldn't say this is strategy, I would say psychology. Like where is market making you think? What is market trying you to show? You have to wait and let the 90% traders react on that level. And then you wait for the market to execute your plan, your strategy. So example, you could say so many times on Bitcoin. Every time Bitcoin hits a new time high, it has like right now when Bitcoin crossed $125,000, people said it will go to $150,000. People made heavy position on 125, 120, and now Bitcoin is on 66. So that is how market always do. So always understand what retail traders are thinking, and then you find your, you reverse engineer it. Like see what big institutions are trying to do. That is what have kept me profitable. That is how I always capture a big position. I could show you everything on the chart, explain you where these levels react, how it reacts, and how you should trade on it.
For the viewers watching, the goal of this video, I want them to get value by being able to understand this strategy in this short episode and then be able to apply it after they watch this. So before we get technical on the chart, where should we start if someone wants to learn and apply this strategy after watching this video?
So first of all, let's suppose what a beginner trading is learning. So he learns this is a resistance, this is a support. So either he learns when a market is sustaining here and there is a breakdown, you enter at this point, you should enter here, right?
Yep.
And then you could keep your stop loss here and your target like according to your risk reward. What is the second thing you have been learning? It's like if there is a pattern which is a double top, you make a resistance zone here. This is called as neckline. You enter here and then your stop loss is here and your target is just at the bottom. This is something I could teach a 5th grade student in 15 minutes. I could teach him all the patterns. I could teach him supply, demand, everything. But why 95% people traders are still losing? The main reason first is the psychology, and then these people getting trapped here. How many times it has happened with you that every time you entered the trade, it hit your stop loss and then it hit your targets?
It's happened many times.
Many
I think everybody goes through it.
Yeah. Let's think of this big players, big institutions.
Yeah.
And they're teaching you one thing. Okay, that they know exact pattern where you're going to enter. They know the exact strategy which you're planning. They know your exact entry. Now imagine all these people, they teach you one thing, they use it against you. That's how it works. See, market is about demand and supply, right? In the market, if there are 10 apples, so it is limited. It's gonna be just move between buyers and sellers. There are not new apples going to come in the market. For example, Bitcoin is limited in the market. It's just moving between the buyers and sellers, right? So let's suppose if this is a breakdown and this 90% people are thinking to sell here, how it will go down? There should be also buyers who are gonna give that their quantity to these sellers. What market makers think, or what market makers do, the liquidity providers, you could say, they make them think that this is your entry point. This is where, because these are the people with big money, and they want a lot of quantity to come there so they could use it to sell their positions.
Yeah.
That is what we call liquidity.
Yeah.
So what I understood with this is now I have to use this circle where I mark, where we learn that there should be an entry point here, and then I reversed engineer it, and then I developed a strategy on it. So it's called a red box when we are trading a reversal, and it's called a black box if we are trading on the same direction, which I'll explain more better on the chart.
And I know you're using liquidity. Are you using support or resistance or supply and demand for your liquidity?
I would say we need these levels for the support and resistance levels, because that is where 99% people are trading, right?
Yeah.
So we need these levels for our entry points and putting our stop loss, because these are the levels which defines like a stop point. Because what is a support zone? So support zone is basically where the price is getting a support. Like this price is getting a support. Like basic mindset behind this level is there are buyers trying to buy on this zone.
Yep.
And vice versa for sellers. So we need these levels to plan what price people are trying to buy and where our entry point should be.
And this strategy, are you mainly trading it on volatile pairs like BTC and gold
Everywhere,
and silver?
all pairs. I could show you any time frame for investing, swing trading, intraday trading, 1 minute time frame, 5 minute time frame. I could, if the market is open, now the market is highly volatile, I could show you, try to live trade if there is any setup of mine.
And in short, what would you say your trade playbook is like? I want to know kind of, are you scalping? Are you intraday? Are you swing trading? What time frames are you using? What sessions do you prefer to trade? Do you have like this kind of package that you use?
See, markets are never the same. I won't say I have to be always a scalper. It is about adapting with the market. Like imagine it's summer season, okay? So summer can be sometimes very hot. It could be like less hot. It could rain on a random day. It could be winter. So every time you go out, you have to like see what's the weather. And if it's raining, you have umbrella. If it's sunny, you wear light clothes. If it's winter, you wear warm clothes. So it's like adapting with the market. If I would say now Bitcoin is crashing and now it's on 66,000, and now my strategy should be scalping, I would say bad idea. I would say rather I would invest in Bitcoin right now, like a swing trade on Bitcoin, because now I could capture a big move. But gold is like example in a small range, volatile range. Now is the best time to scalp gold. So it depends on what plan you are executing. It's a very bad idea to stick on one thing.
So you like being diverse with your trading?
Exactly, like because see, sometimes you are very busy, sometimes you are very free. You also have your times. So according to your time, for example, if I'm traveling, I would rather prefer on trading on bigger time frames, have a big stop loss, and play a long trade. So I don't have to give much time on the market. But when I'm doing live streaming, I know I have my 1 hour here, and there are 10,000 people watching me. So I have to anyhow give them a trade, and I also have to take a trade. So I'll go on 1 minute and scalp there. In both markets, I'll make money. Both time frames, I'll make money, because my psychology is clear on that.
All right, Abhay, so let's jump into the charts and talk about technicals.
Sure. So now this is the gold chart, and the current timing is 6 p.m. Dubai time. So if you see now currently its market is sideways. We are in the US session. Since yesterday, it hasn't moved much. So we won't like trade here much, or there are no setups currently. Simply understand between like 5,150 to 5,200, like a 50 pips range, which is honestly very small to trade. We will still see if the zone breaks, we could take a live trade. But anyways, let's zoom it out. Just identify the biggest moves of gold in this chart. Okay, this one. So if you see this move has been, it's almost 4,700, 3,000 pips, which is like a crazy move for a gold. If you break this down, I'll show you multiple points where you could have took this trade. Let's mark a support zone, okay? This level, 4,800. Now you could draw this exact line. Also, it's a support, and you could also draw this line, which is also a support, like a zone you could draw. Now, what happened here? Market invited buyers on this pullback, right? It invited them again here. It invited them again here. So now, what's the basic ideology of a retail trader here? Maybe you could see this making as a kind of head and shoulder, right? Like similar. If you see this on 1 hour, it will look like a head and shoulder. Okay. A seller, like think it as a seller. A seller would be waiting for this level to break it down.
Yeah.
Right. For a buyer who has bought here, he would put his stop loss here, somewhere below this level, make it a long position, and he would be adding more quantities here, because he would be thinking, for the buyers who missed this support, they would be thinking, it came here again, let me buy it here, right, with the stop loss below. Third time, buyer would be like, now this time it will go more up, let me buy here. Trader who is bullish on market and is trying to find a buying opportunities, he won't think it on a bearish way. And there is always a seller who is seeing this market and would think it in a bearish way, thinking that this level has been tested multiple times, so he's trying to trade a breakdown. Let's see what happened here. So market gave a breakdown, like a healthy breakdown, here.
Yep.
So now big players started entering this trade. The buyers who bought here, the stop loss was gone. Now what we see on the plain chart before this, what I told you, like people are waiting for this level to test multiple times. So there is a breakdown, so they enter on a sell side. What would you do here? Enter on.
I mean, if this broke this area of support right here, I would take a sell.
Sell.
Try to get a breakout trade.
Yeah, that's a basic trade.
Yeah.
But see what happened. It broke 4,800. It also gave a retest here, like, for the retest traders who wait for the confirmation, trade on the
breakouts,
retest.
Yeah.
So if you see here carefully, like let me clean the chart. I'll draw this one line again. Okay, and this. And if you see here, it gave a retest, like look at this point.
Yep.
So this made all the sellers who like missed this breakdown to enter again on the retest, and then give a good selling as well. If someone missed this retest, this trade gave them a retest again here, like proper zone retest, and like it started making a lower low. Now see, as soon as it crossed this round number, you see 4,700. Do you see exact this line? Like 4,700, 4,800. These are called psychological numbers, like a big number. So like big players, like not big players, like people with, you could say trading on 20 lots, 50 lots, they trade basis on these numbers. So when they see, gold has tried to break 4,000, it broke a multiple support zone. It broke 4,700 as well. Now these traders will try to enter here again. But see what happened. Market just wanted to shoot up, like go big rally. So for that, it wanted a lot of liquidity, lot of sellers. So what it did, it gave a breakdown, it gave a retest, it invited the sellers. Also, it removed the buyers who were trying to buy on this level. It removed them, so buyers made a loss here. The market moved to the selling side, right? It invited all the sellers, and now what would be your entry point? I'll explain you later. But see, this was a liquidity zone, which I called as a red box according to my strategy, like a red signal, red box. And after this, your entry should be like just as soon as there was a reversal. Suppose on 4,800 would be your, like this made a high, higher low. Your entry should be here. And for the 800, now if you see from here, I'll just zoom it out, take the next resistance, which was here, boom, your target is hit. Your entry point should have been here, and this would have been your TP. So if you see by the risk reward, with a small SL, which is just below this support, so it would have been a nice risk reward of, you could see almost 2,500 pips with a risk reward of 1:8.
Did you catch this, by the way?
So exactly this trade, which was the day 6th Feb, and this is on the same setup I made $100,000. Same setup. Day before yesterday on same setup I made $30,000. Day before yesterday same setup I made $20,000 on live. It's all all on my channel. You could go anytime. You could see me explaining this trade like on a 1 minute time frame. It was here. I told after some time it would be here and then it would be here. Exactly, we followed the same path.
And one question I have for you, Abhay, is how do you draw these boxes accurately?
If you see this zone, right? Is it the same exact setup which I showed you? Buyers invited,
Yeah.
buyers invited,
Another invite over here too
another invite over here,
for sellers.
breakdown. If you see here, there was also a retest in a red candle. But then this trade went up. You entered here with a stop loss below this level, right? And target, you could keep multiple targets. Target 1 is always a resistance, a big resistance zone, which I could mark here. Reason, because this level was a strong level. That's why it sustained so much. And second, I could keep it here, like target 2. So what my strategy would be, always on a target 1, I book 40 to 50% of my quantity, and rest quantity I book it on my target 2. Or I could book 80 to 90% and 10% I would just keep it open if I feel the market is going to be trending.
And do you move your SL to break even?
SL to break even as soon as it hits the target.
Yeah.
So in this case, what would be my target? It's still like sideways. Maybe if market breaks this resistance, I would like hit my T2. Now, you asked me about how I draw these levels.
Yeah,
And
accurately.
Accurately. You know what happens is gold is very difficult to draw levels, technical analysis, because it has so many levels which will confuse the beginner. For example, what is technical analysis? Like the basic foundation, it says any level which is tested 2 times is your support zone, or is your resistance zone, or is your trend line. So basically, any level like the price, if it hits 2 times, that means it's a resistance zone, like basically double top. How does double top work? It basically is 2 swing, so it made your resistance because market used this level 2 times. So this is your resistance zone, right? Now, if we try to do that and see like how many levels we are getting here, how should I trade? Example here, if I draw this zone, this resistance, like based on this, again there was a setup which we trade on, like a red box setup. Like again market used this breakout as a liquidity, and again reversal sell side. But then again, if you extend this level, okay, this is a sideways market. Let's see more examples where I could now see this is a swing and this is the swing, right? Now I draw my support level here, but you see market doesn't respect this. And if I draw my resistance zone here, I could say, okay, this is a breakout and retest. Okay, let's use this level here. So this swing, if you see market use this level multiple times, now I just extended this level. If you see gold didn't respect this. Again, it kind of made our setup like a red box setup. But again, then I used this level as well and extended this. Then market just again didn't respect this level. It like tried to break it down and then touch this level again. Then it tried to cross it. So what happens in trading gold is a lot of time you try to draw the levels, but you are always wrong because gold doesn't use the exact support resistance, like exact swings. It uses different zones as well. It also uses the levels which are like, for example, let's suppose this is a swing.
Yep.
Okay. So what we usually draw resistance is like this level. This, like the price where it started falling from. But the gold, in the case of gold, it uses both the levels, both the swings. So this is the most important part. But a lot of traders, like a beginner traders, make this mistake. Even professional traders make this mistake. They're always relied on drawing like manual levels. And if your levels are wrong, your entry is wrong, your stop loss is wrong, your target is wrong, and your direction is also wrong. Everything is wrong. So for this, I developed a tool which helps you in drawing the levels. And on that basis, you could just identify the liquidity point and trade on the red box, black box. So let's suppose I enable my tool. So if you see, it is giving me exact zones, exact levels, and it's predefined. It's not like after the candles are made, it's gonna make those levels. Like all the indicators are lagging, but this one, no. So I also add a lot of buy sell tools on this for beginners. I'll remove this, like, so we can be neutral. But if you are a beginner, you can use this as well to mark the buy sell level. Now I'm also developing, like, if you go on the inputs, it will also help you like enable projection, show target, stop loss, and all these things based on these levels.
So it automates everything for you.
Yeah, but like I don't like algos where the bot is trading for you, because market is constantly evolving, and bots are basically you put your strategies, but it's not adapting.
Yeah.
So brain is the best thing.
Stagnant.
Yeah. So now if you see, all these levels are predefined. It will only show you the important level, important zone, important support, important swings. The more stronger level is, the more the width will be. If you say the width here is big, that means the level is strong. If you say the width is small, that means level is okay. The yellows are the support and the blues are the resistance. So now let's suppose here, what I have to do here is just extend this zone. Now, if you see in the sideways market, you will see multiple zones because it's identifying these zones as well. But in a trending market, it will show you the less zones. Now, if you see here, what will be my strategy? I will just use the bottom zones here. Let me draw this. This bottom zone, I'll mark this, and I'll also mark this zone on this top. Okay, why? Because market is currently in between this zone.
Yep.
And these are the like bottom level and top level. So what would my strategy will be? Either if the momentum is very strong, I will just sell here. If the momentum is strong, if the momentum is slow, like this, that means there is going to be a breakout. Okay, like if market comes to the resistance and sustains, that means there is a chance it's going to break there. So in that case, we'll use the liquidity. Why I told you if the momentum is strong, we'll trade this level? Because when the momentum is strong, gold reverses very fast, because there usually the momentum is strong because there are buyers here. Like on this breakout, there are buyers here. And market, what it does, when the momentum is fast, it shows there is a lot of liquidity in that trade. And as soon as it hits a strong level, it usually reverses.
Yeah.
So we'll only sell on the supply demand zone if the momentum is very fast. And you will see a pattern that it has already given a breakout from somewhere. So basically in this case also, we are technically trading a reversal, but we are using the supply demand zone.
And do you prefer these to be fresh, or is it fine if it taps this
Even
twice?
See, if it twice taps it twice, on the second time I will use it, but not on the third time. That if it taps on this level third time, it means the level is not strong. But second time we can understand, because usually a reversal pattern, like a reversal, is made when the price, like let's suppose why I would use this on the second tap. Let's suppose this is a resistance zone. Okay. Now the price goes here for the first time and comes down. Okay. Now this price tries to go again second time. If this buying is strong, okay, that means this swing will break. Higher low, higher high.
Yep.
But if this buying is weak, like very weak, it won't even break this level. So that means this buyers are weak here. So we'll try to trade on the second tap. So second tap is important because that is how mostly reversals are. But on the third tap, no. Third tap, I'll wait for this trade to break out, use that liquidity to trade the reversal. So now I explained you about the red box. I explained you about this tool. See, I don't want to always draw the line, support, resistance, and so many times I draw it wrong. Because we are humans. We sometimes miss, like I would draw this line, but I would miss this swing. Because these tools give me predefined levels. So makes it easy for me to just focus on my trade and not on drawing the levels, okay? Now, if you ask me how to trade the black box strategy. So let's suppose this strategy is used when the market is trending. Suppose the gold trade is in a bullish bias. You understand what is bias. It's basically what a trend is. So you understand if the bias is bullish, you should not trade against the trend, right? So red box works very nice when you understand the market is in a zone or in a levels where there could be a reversals, like a volatility, like a traps. But when market is like a bullish bias, and you know that you have to trade on the same direction because that's the bias, that is when you use black box. So if I give you a rough example of simple definition of how black box is used, is basically, suppose this is a resistance zone. So what market does is, like gold does this a lot of time, like on forex pairs. It gives a breakout, bias I entered here. So in this structure, what do you think? What is the market structure at this point?
This is a higher high.
Higher high, right? So now imagine you are entering this point where now you're a perfect trap position, liquidity position, and also a higher high. This is the worst place to enter.
Yeah.
And this is what you are being taught by your mentors to enter.
Yeah.
Oh, this is a resistance break, buy, rally. No. This is where people lose money, because this is the point market use this liquidity, use the higher high, and goes for making a higher low structure. Okay. So now what happens? All the buyers here, they get trapped. The stop loss is hit because the stop loss was here.
Yep.
And then the market makers push this price to the new higher high. So this zone is I call black box. So what we usually do, I know market is in a bullish bias. We let this price break. We don't do anything. We use this as a yellow signal.
Yeah.
Like an alert
Don't
signal.
get FOMO.
Don't get FOMO. Like alert. Okay, breakout. Now I have to be alert. Now I have to be watching charts. We have to wait for the price to reverse. Right? Now you would say, oh, this can be also a red box, right? Because this can be also reversal. Like
Yeah.
this is like I show you the setups before.
Of course, same thing. Yeah.
But you would say, why not trade on the red box here? But for the red box, the main thing is this trade should not cross this resistance. It should start making lower low. Okay, on this lower low, we could enter here. If you see, okay, you made your mind, market is bullish bias, I want to go for a buy trade. Okay, so basically you are waiting for this yellow signal, then let the price come down, let it cross this resistance, and that is when you enter the long. So that is your plan to enter for a long. But suppose you're waiting, and you see price goes to this resistance, makes a pin bar, takes a rejection, and goes down again. So now it's making a lower low. So you could enter for a sell trade here.
Yeah.
You adapted. You made a mind. You saw the bullish biasness, but you saw that this price is now making lower low. So you adapted yourself. But mostly with the psychology, with the understanding of the trend, price, you would have mostly enter for a long position here. As I mentioned you about the black box strategy, when the trend is one directional. Now, let's suppose if you mark your resistance zones, suppose this is your resistance zone, right?
Yeah.
Now this level has been tested multiple times, and USD JPY is, overall like movement is also like on the upside if you see from the. So now basically what does this mean to you? Like market invited the sellers here, it invited them here, it invited them here, it invited them here, it invited them here. Also multiple times. Market has a very strong resistance zone. It will just fall as soon as the market, like it will just touch and fall. Like this is the perfect, I would say, selling zone. But if the levels are not strong enough, it will just play around this level. Like example, you could see here, this one. It was like invited, then again go up, then invited, again go up. So it's just playing it. But if it's very strong level, it will just touch, and the next candle you will see is going down.
Yeah.
Like you remember on the gold trade when I said like, when will we use this supply zone? When the market is like in a, like you could see here,
A push, impulsive
strong
move up.
impulsive move.
Impulsive
You would
move
say
down.
like a strong, like a breakout here as well. Like say this.
Yeah.
Like an impulsive move, touch this level and fall. So it has to be impulsive move. But then if you see here, it got fall, up move, and then it got started sustaining. Like if I would be here and I would have entered a sell trade. First of all, this level has been tested like third time. Then I would say, okay, let's enter this level. But I would say 2 times it would have respected my zone. I would have just exited here if I would be in a selling mindset. So now I have made my mindset that I have to buy. Okay. But now let's suppose you wait for this resistance level to break. Now where would you enter? Here, as I told you, where the buyers enter after. So your entry would have been here. This is what I call a black box. When there is a breakout, you have to mark this zone as yellow zone. Now, if you understand the market structure, follow this: higher high, higher low, higher high, right? So now you are basically entering a higher high if you're trying to enter here. So higher high, then this big resistance breakout, you entered in liquidity, right? And this is where you're gonna get trapped. So what market did here? You entered here with the SL like below this support zone. Now see what happened. You entered, market hit your stop loss,
Yep.
and now look at this momentum.
Huge impulse up.
Huge impulse. What happened here? It didn't break this low. It just created a new, this was higher low, this was higher high, this was higher low as well. But it just took your liquidity, removed the bias, removed all the bullish trades, stop loss, hunt the stop loss, and then this move. That's why we always say market like makes you hit your stop loss and then moves to your direction, because that is why you're always entering at the wrong market structure. When there is liquidity, when there is impulse move, you should enter in a trade where mostly people will lose their stop loss. Your entry should have been here now. And you know what happens is like if the market is moving into your direction and it has already hit your like normally it has hit the retailer stop loss. Like for example, if you would have entered this is our entry point. It has already hit the stop loss of the first time buyers. 90% chances are it won't hit your stop loss for the second time, for the second entry points. Or sometimes what happens is like you enter here, okay, sometimes you entered here and then market is going the second time. You could enter the second time. 80 to 90% chances are this time it will go.
Yep.
Because if the market is coming on the same price second time, that means it is trying to go that direction. So this is how black box works. On my YouTube channel, Traders Paradise Live, I have explained this in a 2 parts, 30 minutes video. It's in English, Arabic, Spanish, Russian, all languages. So you could watch that videos as well. You could add it here.
Yeah,
For the people who
in the
want,
description.
yeah, for the people who want it in more detailed depth with more examples. And also, if you want this indicator, you could like simply go to TradersParadiseLive.com. I have my indicator there, and you could get that free as well as paid version.
All right, Abhay. Well, yeah, thank you for coming on today, explaining your red box and black box theory. If you guys do want to see a part 2, be sure to subscribe and comment down below what you want to see in part 2. Also, if you want to see me and Abhay live stream and live trade together, let us know in the comments below and we'll get that going. Catch you guys next time.